In this video, I'm going to teach you how to do the Backdoor Roth IRA in 4 simple steps through Fidelity. I am also going to teach you how to avoid the 2 major mistakes that people often do when they do the Backdoor Roth IRA, so you don't get into trouble with the IRS. The other YouTube videos are not going to tell you about this. Now, you might ask, why bother doing a Backdoor Roth IRA? Is it worth the hassle? Well, if you want to make money and not pay any taxes, then this video might be for you. Step number 1, contribute to a traditional IRA in Fidelity. Why Fidelity? So you can gain access to their zero-fee funds. So first, open a traditional account in Fidelity. To open an account in Fidelity, simply go to fidelity.com, click on Open an Account, choose a traditional IRA, click on Open Now. And when asked, are you already a Fidelity customer? Just say yes or no. And just provide your personal information details here, follow the prompts, and you will soon have a traditional IRA in Fidelity. After you have opened a traditional IRA account in Fidelity, log in, click on Transfer at the upper left, and then when asked which account do you want to move the money from, you will need to link your bank account. When asked where will the money be transferred to, that's when you pick your traditional IRA account that you just opened. And then under Enter your transfer details, choose one time for occurrence. And then you need to input the amount that you'd like to contribute. It will typically say the maximum amount that you can contribute for the current tax year, which is nice to make sure that you don't over contribute. And one pro tip here, if let's say you're contributing $7,000 to a traditional IRA, you just need to make sure that you have $7,000 in earned income, like W-2 wage or self-employment income, to make sure that you are eligible to contribute to a traditional IRA. Now, another pro tip here is when you file your taxes, make sure you do not deduct this contribution to your traditional IRA. That's why it's called a non-deductible traditional IRA. And you can confirm that in your tax return. You should see a Form 8606 for non-deductible traditional IRAs, and make sure that your contribution is reflected in that Form 8606. Step number 2, invest your contribution. Now, this step is the one that is most commonly missed by most people doing a Backdoor Roth IRAs, not mentioned in other YouTube videos. If you convert your contribution right away to a Roth, you will run into an IRS issue called the Step Transaction Doctrine issue. Run into what issue now? The Step Transaction Doctrine is a thing in the US tax courts where if you perform a series of single steps consecutively, like contributing to a traditional IRA and converting it to a Roth immediately, the IRS will see that as a single transaction, which is you contributing to a Roth, where you are no longer eligible because you make too much money. So do yourself a favor, avoid this first major mistake that people often do, and invest your contribution and wait for a couple months before converting it to a Roth. Now, to invest your contribution, log in and click on Trade at the upper left, and then select your traditional IRA account and buy whichever ETF, mutual fund, or stock that you'd like to purchase. The nice thing about doing this in Fidelity is if you fund your contribution while the stock market is open, which is 9:30 a.m. Eastern to 4 p.m. Eastern, you can actually invest your contribution right away, even though your money is still flowing through cyberspace. The third step in doing a Backdoor Roth IRA in Fidelity properly is move your pre-tax IRA money into your current 401k or 403b or TSP retirement plan if you work for the government. What do I mean by this? There is another boring IRS rule called the IRS aggregation rule, which is not so boring if you get a huge tax bill if you skip this step. Let me explain how that works. Let's say you have $93,000 in a pre-tax SEP IRA or rollover IRA, and this usually comes, a rollover IRA comes from an old 401k and you moved it to an IRA. That's going to be pre-tax most likely. And then you contributed $7,000 to your new Fidelity traditional IRA. So you have a total of $100,000 in IRA money, 7% of which is non-deductible. But if you converted that $7,000 in your non-deductible traditional IRA while having that $93,000 in pre-tax rollover IRA money, the IRS, because they treat it in aggregate, your IRA, will treat it as if you converted 7% of your overall IRA money, part of which is pre-tax. And as a result, if you skip this step, you might get an unnecessary huge tax bill, which I want you to avoid. So do yourself a favor and move your pre-tax IRAs into your current 401k plan before you proceed to step 4. The fourth and final step in doing a backdoor Roth IRA properly in Fidelity is converting your traditional IRA to a Roth IRA. This is the moment you've been waiting for. The key question really before us here is when to do this conversion process. If you ask 5 financial advisors, you will get 5 different answers. Some wait for maybe just a month before converting it. Some prefer to wait for at least a year. Again, waiting is the key to avoid the step transaction doctrine issue that I mentioned about. So it's really up to you. For clients at District Capital, we usually have them wait for a couple of months. So if you want to convert your traditional IRA to a Roth, once you're ready, log in and click on transfer at the upper left. When asked which account you want to move the money from, you want to choose your traditional IRA. When asked where will the money be transferred to, choose your Roth IRA. By the way, you need to open a Roth IRA first to do this step. So choose Roth IRA, where will the money be transferred to? And 2 key things. When asked under tax withholding election, make sure you choose I elect not to have federal taxes withheld, so you'll have more money going into your Roth, growing tax-free. And then you want to click on convert entire account balance and leave my account open, because you'll want to do this every year if you choose to, so you can grow your money tax-free. And voila, now you have made a backdoor Roth IRA.